I have a trade on GEV, another one, and this starts on the 3/12, March 12th, 2025. I'm going to go ahead and lock this date right here. Let's try this again. Lock. Okay, so I started on this candle, first candle on March 12th. If I pull up the Russell, I'm looking on some other charts here really quick. If I pull up the Russell 2000, on this candle, we basically have straight line information on the Russell. It's not actually perfect. If you turn off the noise, you can see this is not crossing. This is, and technically, where's my cursor? There we go. If I go back to the previous candle, you can see that it is at 10.15, the directional movement. So it's not technically straight line information, but it is very close, and probably correct. That's moving up, and on the daily, this is coming up off of the 987. There's a doji previous candle. This isn't crossing, but it is below 20. Slight reversal here, and this is cocked, starting to move up. So pretty good support from the Russell, I would say. And even if you were to go back one candle, you have a white candle coming up from the 987, previously on the bottom Bollinger Band for weeks. These are rising. This is certainly fired, and this is almost one. So you can see movement there. Let's come back to the GEV chart. And if you were to look at this candle, you have crossing on the Christmas cross. This might have been not, this isn't, this was crossing the previous candle, but this one is, and this one is. So 1, 2, 3. If you go to the weekly, I would call that a white, probably two whites, but certainly one. I guess depends how big the candle is. Similar size candle, you may be approaching the 21. So I called white here as far as evidence or support from these two larger charts. You have the bottom Bollinger Band rising off and then coming up from the rising 55 auto wave line, stock RSI, say that was crossing. And then we have cocked down here. We have not quite crossing, the lines aren't crossing. We have stock RSI and the MACD, and not quite right here. Yeah, yep. So that's where I called the start of the move, or the not the start of the move, but the trade entry. I think this is a trade, and this is the decision chart. As far as the auto wave calculation, 13 points higher than 302.55 right here, takes you about 315. The auto wave calculation is mid-March, the year that is in 5. The earnings on the one on January 21st, which was a miss. I didn't have the options charts. So the month-to-month calendar says look for entry points to the upside from the middle to the end of the month, especially the last few days. So we're basically at the middle of the month. So there's some support there. I won't go through all of the predictive paragraph necessarily, but you kind of look at, as far as lines to be concerned about, the 21, which was kind of a concern for me. If you look at the larger charts, that you're running into the 13 on the daily, nothing on the 3-day. Go up to the 34. on that 34, you have this 21 that may be starting to come into play. It's pretty steep. And then the 233, that's definitely the daily's 21 will be part of that. And actually, the 3 days 13 could be down there by then. So that was kind of the end of the predictive paragraph. I said go ahead. The March 315s, just the normal March, which is about 10 days from this, because I really didn't see the trade going very long. So this is March 12th. Got to go back one more, March 12th. Yeah, so it's about 9 days from now. But that was, I said, 9 days to get up to about 320. So that seemed quite reasonable. That was what I trying to blow through it by a strike price. So at least to 320. That seems very feasible in the next few days. It doesn't need to go even a whole week. So I'm going to go ahead and bump forward to. So just kind of notice that the opening price 302.55. It's hard to sometimes these lines kind of mask that. So I'll go forward to boom boom. So a slight pullback or a doji candle, but not an exit. Go two more candles for the 3-day, 3 candle rule. Boom, boom. Okay, so moving in my direction. So for exit criteria on the 233, we have the 34, 233-minute chart. You have the 34 moving average line, the top wick. You have the auto wave line, stock RSI is greater than 80. And there is continuation right here. On the daily, I'm not seeing any, but there's continuation. On the 3-day, I'm not seeing any either. So go ahead and stay. We'll go to the second candle on the 14th. So 34, auto wave line, stock RSI greater than 80. Continuation on the daily and the 3 days, still not seeing any. So I said I'm staying, still seeing plenty of room until the daily is 21, maybe 8 points or so. I know there's a 10-point difference right here, but the 21 will be declining. So I thought there was still, maybe 5 to 8 points that could be earned, that could be gotten here. So we'll go to the that's a Friday close. So we'll go to the first candle on Monday the 17th. Okay, so it pushed through the, okay, so on the 233-minute chart, we're now at the 233 moving average. The auto wave line, stock RSI is greater than 80. I wouldn't say it's quite crossing, but it's very close. Still have continuation. And on the daily and the 3-day, you don't have any because it pushed through past the daily's 21. Not much time left on the options. Said maybe one more candle. We'll see. And then go one more candle. So it goes from 328.52 to 331.96. So I'm 3.5 points higher. So now we're basically the 55 is coming into play just above the 233. We have the auto wave line. Stock RSI is greater than 80, basically on the verge of crossing there. So I counted that one. Still have continuation on the daily and the 3-day. There really isn't any, there really aren't any, there's no exit. There aren't any piece of exit criteria, I guess, however you want to say that. The 34 is kind of coming up and there is continuation. However, I said go ahead and exit right here. It's the end of Monday, only a couple of days left before I'd have to, by rule, exit anyway. So exit on this candle, 331.96. Probably would be looking at this towards the end of the day and just close on that day instead of waiting. Because despite continuation and a few pieces of exit criteria on the 233, the forward chart reading indicates shows only a small amount of more potential gain before I must sell the options due to expiration. And I see a lot more risk of a pullback at this point. So just exit right here. So as far as I'm concerned, I think my entry was shiny gold. It would have been really tempting to let's find that opening again. There we go. It would have been really tempting to try to enter right there of this candle because you do have SLI on the 233. But if I, as we looked at the Russell, um, based on my experience at least, going back to that previous, this is where this was the decision right here. So the second candle on the 11th, I'm not really seeing straight line information like support from the market. So I didn't enter there. Had I entered there, I would have had like 600% gain because that was at a substantially lower price. But actually, I have that price right here. 390 is what that stock, the option price would have been instead of 710. The option price at close was $20. So that's a 182% gain, which is really great. Going from 390 to 200 would have been like 600 or something like that. But I think I entered on the correct candle. The previous candle, based on my experience, was not correct. So I have shiny gold there. And then as I look forward, I track these step by step. And then I exited on the correct candle. Actually, it's a perfect exit. I think it was very well reasoned. Actually, if you continue forward here, it drops. And that was Thursday, and it was definitely higher, but I wasn't going to stay in those options that long. That was too late by rule. So I think it was a perfect exit and something to kind of just be aware of this entry. Yeah. Okay.